What if I told you that most ACCA students walk into their exams thinking they understand the difference between standard costing and budgeting, only to lose crucial marks because they don't really get it? It's a trap. And if you've ever been stuck staring at a question wondering, wait, aren't these the same thing? You're not alone. Imagine preparing for weeks, pouring your energy into every past paper, and then blanking out on a concept that seems simple, but is strategically designed to confuse you. This isn't just about definitions. This is about the why, the how, and the real-life impact these two cost-controlled tools can have, not just in exams, but in boardrooms. If you're chasing excellence in ACCA management accounting, or you're simply tired of hearing the same copy-paste definitions that don't make things clearer, this video is not just important. It's essential. Because here's the truth, knowing the textbook difference isn't enough. You need to understand how standard costing and budgeting think, the way they behave under pressure, how they fit into the bigger financial picture. To make this distinction crystal clear, we're going to explore this through three powerful lenses: mentality, the psychology and purpose behind each tool; mechanics, how they actually work in real companies; misconceptions, the silent mistakes students make in the exam hall. Let's start with the first. The mentality, purpose over process. Standard costing is surgical. It's about control. It's the scalpel that slices through operational inefficiencies, piece by piece. You use it to analyze variances, to isolate and correct where things are going off track. Budgeting? That's the blueprint. It's architectural. A budget builds the vision of what's to come. It reflects strategic intent, where you want to go, what you aim to achieve. It provides a broader sense of direction. So while budgeting sets the goal, standard costing keeps you disciplined in executing it. Ask yourself, have you ever tried to stick to a gym schedule? The budget is your plan to work out 5 times a week. Standard costing is what tells you how far you actually deviated, and why. One is motivational, the other is investigative. Standard costing isn't about the future. It's about the fight. It's about confronting what actually happened versus what was supposed to happen, and holding people accountable. That's why it scares some managers. The mechanics, breaking it down practically. Let's get a little technical, but stay with me, because this is where the light bulb goes on. Standard costing, this system sets standard costs for materials, labor, and overheads. These aren't guesses. They're carefully calculated, often based on historical data, time and motion studies, or engineering assessments. Once the actual costs roll in, variances are calculated. Material price variance, labor efficiency variance, overhead absorption variance. Each variance tells a story. A material price variance might point to a supplier issue, or an economic one. Labor efficiency variance might indicate poor training or machine downtime. This is what makes standard costing dynamic. It's not just numbers. It's forensic finance. Budgets, on the other hand, encompass more than costs. They deal with revenue targets, departmental spends, and investment forecasts. They can be fixed, flexible, incremental, or zero-based. Think of a company projecting sales growth of 15% next quarter. The budget sets the operational, staffing, and capital costs required to support that growth. Standard costing might then monitor those operations to see if costs aligned with the standards assumed in the budget. So here's a simple metaphor. Budgeting is the strategy room. Standard costing is the control tower. If you mix them up, you miss the point. Misconceptions, the traps ACCA students fall into. Most students fail to recognize that standard costs are a subset of what budgeting attempts to predict. You'll often hear this line. In class, they both involve future planning. That's half true and dangerously vague. In ACCA MA and PM papers, questions will test your clarity between variance analysis, standard costing, budgeting methods, e.g., flexed budgets, performance evaluation, using both. Here's what no one tells you. A flexed budget is not the same as a standard cost sheet. It adjusts the original budget for actual activity levels, but doesn't dive into why costs change. Standard costing digs deeper. If you answer these questions assuming they're the same tool, you'll confuse analysis with planning and control with vision. Let's be honest. Most examiners see this confusion every session, and they penalize it harshly. In the real world, imagine a factory running on tight margins. A budget might predict profit based on a certain output. But when actual performance dips, it's not the budget that tells management why things went wrong. It's standard costing. It'll show the cost of wasted materials, how machine idle time ate into efficiency, where labor underperformance quietly crushed productivity. That's why CFOs don't just want budget planners. They need variance hunters. You want to be a finance professional who can say, "This is where we failed. This is what it cost us. And this is how we fix it." If you think budgeting makes you financially smart, you're half right. The other half? It's what you do when your numbers start lying to you. That's where standard costing steps in. Advanced insight when standard costing fails. Here's a curveball: standard costing isn't perfect. In fast-changing industries, like tech or fashion, where input prices change daily and innovation trumps routine, standard costing can be outdated before it's applied. In these cases, companies rely more on rolling budgets and real-time dashboards than traditional variance analysis. So, a high-level understanding means you also know when not to rely on it. That's the mark of true strategic finance thinking. Don't stop here. This isn't the end. It's your starting point. If you're serious about mastering management accounting, there's another video you need to see. It's all about how to use flexed budgets and performance ratios the way CFOs actually do in the field. Check it out now, and tell us in the comments, what's one thing you misunderstood about standard costing before today? Because clarity is currency, and today, you just got richer.